Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning market webcast. All right. There was no evening webcast last night. Every once in a while, the nights are just going to get too crazy, and I can't get one out. We'll get one out tonight for sure. So daily pivot. We had the Fed yesterday. The one of the prices that we like to track in the room is the pre-FOMC print price. And yesterday that was $29.35. So you can see up day yesterday, pretty steady up day. It was a day where the morning really wasn't very volatile, but it was steady. So what we found ourselves doing is just going back into some of the old trade management rules that we would use on any typical day. Like instead of, some of the stuff that we've been trying to do with this crazy volatility, like, grabbing 10 on our first third and stuff like that. We found ourselves just kind of getting back to normal stuff, which was fine. We put together a 19-20 handle morning before the Fed. It actually didn't get choppy until the Fed came out. So 29.35 was your preprint Fed price, 2 o'clock. They tried to take it up. They took it back. They took it up into the close. It got really jiggy there after 350 when all those market on close orders come through. They took it up to 65 overnight, as you can see. And then the bears actually did the most impressive thing they've done all week, which is bring it off a little bit. We're back under 35. We tested 35 at about 7:45, right around the ECB news, their rate news, and they've actually printed a lower low. I'll be interested to see as we head towards 8:30 and jobless claims how price continues to progress, and then what the reaction is into 9:30, what the reaction is into the open. So I missed this move. I missed the move up top because I was asleep. We were long 35 last night, which was fine. But this second move from 35, I literally had my head turned. It happens to everybody, right? Well, it happened to me this morning. I literally had my head turned, and they popped it up to whatever, 36.25. And when I turned around, it was trading 30 or 29. And what you don't do in that situation, you don't chase it. Don't. And I get that it's trading 24, but most times when you chase stuff like that, you're going to get into trouble. So that's just the market telling me don't chase. There will be plenty of volatility today. We've already wound back. We've done 35 to 65 to 23. The volatility will be just fine today. What I'm looking for off the open is, does 35 want to seal off as resistance? If 35 wants to seal off as resistance, and the daily pivot, which is your purple dotted line there, wants to help out, then you start to look at numbers like 2900 and 2880 as areas that price is going to magnify toward. And the bears don't need to put in a gigantic day, but they do need a red day here. They need a red day. They need to be present. They need to say, at least, look, we got up into the 200-day exponential moving average yesterday. And as of now, they've defended it. If they can keep that defended, a more long-term level, then the argument is, that at least you take some of the steam out of it, head back to where we were, say, on Tuesday or Wednesday. And I'm not talking about the end of the line of the move. I'm just saying, it's a good place to take some profit. And that's probably all that it would be. I continue to say the only way the bears take anything off significantly is with news. In a vacuum, and in the face of news that's not as bad as it was a month ago, this market wants to go higher. I think that's obvious to everybody. The choice you make as a trader is, do you want to go with the flow or do you want to fight it? If you want to go with the flow, you can have very, very solid days. If you want to fight it, you can really really mess up your account. So we got to watch 35. We got to watch the daily pivot. Volume weighted average price is stuck up there. It's 43.5. The hourly mid band's at 43. Our proprietary moving average is up around 39, and that's all left over from last night. We'll see if any of that comes in. It should come in a little bit into the open, and then we'll see if that gets tested from underneath off the open. Does it want to hold up as resistance? The open itself should be pretty whippy and choppy. There's plenty to fight over, especially if the news that comes at 8:30 is positive enough to get this tape back to 35, and we end up opening it somewhere in the neighborhood of 35. So 35 has been a battle zone in both directions. I would expect that to stay the same. And if it's going to play ping pong on either side, then we as traders are going to have to take a step back, figure out which way it wants to go. Don't be the ping pong ball. Don't short-term trade long-term inflection points, because that's what you're doing. When you short-term trade long-term inflection points, you are a very small fish in a very big pond that is, it's like two giants that are beating the crap out of each other, and you are, you're some little animal that tries to get in the middle of it. Get out of the way, see who wins, and then let's go. But battling over the pre-FOMC price, and worst case scenario, battling over a zone between the pre-FOMC price at 35 and the 200-day up at 42, that is something we were really going to have to show some discipline and stay out of the way of if that's what it wants to do today. So we'll see in 20 minutes if that's enough to lift it back up into that zone. If it fails it, then if these lower highs continue to perpetuate to the downside, we'll see where we are, and off we go. There'll be more stuff out on social. Again, I apologize for no webcast last night. I got totally tied up with life. There'll be another one out tonight. Be safe, be healthy, take care, trade them well, and I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.